I just forgot to record this. Oh my God, I'm so sorry, everybody. But that's awesome, Mike. I'm really glad that we have got our Tuesday night calls back in action. We all know how much we love them. Guys, if you're brand new on this call, Mike and I have been running these calls since 2017, like a long time now. I know there is a lot of new people in here, people that aren't even in our group yet. Mike, we just had an amazing call with a bunch of people wanting to learn a little bit more about trading. So some of them have jumped on tonight's call, which is cool. But guys, Mike is one of the guys that I mentioned on the call. He's the founder, one of the founders of Trade House. And Mike's been one of my personal mentors for the last 5 years. And something I really pride myself on for our groups is the mentorship side of things, the support, the coaching, anything you need. Most people in this call can vouch for that if you haven't yet already experienced it. And Mike has, he doesn't, get paid to do these calls. He doesn't get paid to wake up at 4 a.m. or anything like that. He does it because he also loves it. So I throw it back to you, Mike, and I never take it for granted. So thank you again for being here and not sleeping on the love sack.
Yeah, I love y'all. Trust me, the love must be very real over that love sack. Let's be honest.
I love that. Now we've got a couple of things to, not really any questions, but there is a specific topic that I really want to nip in the butt heading into this next trading year for you guys. If you want to stay on the call afterwards as well, Mike is running a private, this link has just been like a link whore tonight. It's just been in overdrive for the last couple of hours. Mike is running a private business mentorship for us straight after this call. So I'm really excited for that as well. But something tonight, I'm going to spend the next kind of 5 minutes talking about the question and conversation that I had with one of our traders just today about the fear in trading. And I think this is a really perfect topic to talk about, just at the start, like our first call, because this year, guys, this can be anything you want, right? We already know what's possible. Those who aren't even trading yet, you guys don't even know what's possible yet until, like I said on the call, you guys are knee deep in it. But the point of this call, this type of call it isn't to teach you how to trade. Okay, that's what you're in the company for. That's what you're in the trade house for. Okay, the point of these calls that we run every single Tuesday night is to teach you how to think like a trader, or how to think about how to think to become a successful trader. Okay, and I got a question from one of our students today about fear to go live and fear to place trades. Okay, and she asked me, do I get scared? Now I can't wait to hear Mike's response to this as well, because his brain's just amazing. But the short answer for that, when it comes to trade, the short answer for that is obviously yes, I get scared. Long answer, no. But the narrative here is not that I'm fearless. Okay, there's shit that I'm scared of. Losing my loved ones. I'm scared of standing on ledges on big heights, things like that. Am I scared to take a trade? Not at all. Okay, there's really no need to be. And if you are, maybe that's a scarcity mindset type issue. And scared money doesn't make big money. All right. I guess when it comes to trading and my relationship with fear of placing trades, I've developed myself over the last 10 years to kind of desensitize myself to various types of stimuli, I should say. And in this case, in trading's case, this has allowed me to be able to make decisions based upon numbers, right? All you're doing is you're looking at numbers on a screen, okay? And having that, I've been able to develop myself to make decisions, guys, about what I see in the data, in the numbers, not what I think I see, not what I want to see, not what I hope to see, right? It's just literally numbers on a screen, right? The boogeyman is not there. There is really nothing to be afraid of, all right? So fear is one of the biggest things stopping people from making money in these markets. And I think I believe I owe a lot of my success in trading to my ability of how I deal with change, how I deal with fear, how I deal with uncertainty. All right. And I've grown to develop myself in a way to really understand and learn what I can control and react to and what I can't. Right. Or if I do react, I don't let it define the moments. All right. And to be honest, guys, to be truly successful in this game, you need to develop a really special relationship with winning and a really special relationship with losing. Right. And what Mike, what Jenna, what Zach, okay, what all the trade house educators really hope you guys, or what we want to help you guys with, is not just how to read a chart and how to make money. Okay. We want to change the way you think, right? We want to change the way you look at trading, how others look at trading, right? This is literally what the whole trade house experience is all about. And I think with that, you know, practice comes from experience. I don't believe in whole practice makes perfect anymore. Okay. Practice makes permanent, right? And what I mean by that is that if you continue, oops, I'm just admitting someone. What was I saying? That if you continue, you know, carrying on the same way, doing the same things over and over and over again, this isn't just for trading, guys. Okay. This is, sorry, I'm just muting everyone. This is everything, right? And if you continue doing something the way you've always done it, you're going to develop behavioral patterns that doesn't serve you, right? And this is going to be very difficult for you to break, right? I want you to understand that. If you keep doing things the way you've always done it, you will develop behavioral patterns that don't serve you, and it's going to be very difficult to break. Now, for an example of that, I want you guys to think about cigarette packets, okay? Remember back in the day when brands used to be able to like brand their cigarette packages however they wanted, you know, bright, pretty colors. Now they're all the same color, and they've got some really hectic, gruesome images of like sick, dying people on them, okay? And then they brand them in this tiny little, all the same font, right? Do those images, does that branding stop people from buying cigarettes and smoking, even though they look at the packet every single time they pull one out? Does that stop them from you know, lighting up a ciggy, even though they know how bad it is for them? No. Okay. So think about it. Okay. If 3/4 of you on this call tonight, say you're all losing traders, right? It's not because you don't understand structure or you can't identify, you know, institutional candles or targets or whatever. It's not a strategy problem, guys. You literally are taught the best strategy. It's not even a strategy, okay? You're literally taught the best system, whatever we want to call it, right? It's not a trading problem. It is a human behavior problem. And the sooner you accept that, the sooner you can do something about it. So when it comes to a trade, you know, whether you want to buy or sell, maybe you're right, maybe you're wrong. Okay. For me, one of my biggest bugging questions is, now not targeting anyone, one of my biggest like pet hate questions is, SJ, what do you think so-and-so is going to do? Okay. I'm not Nostradamus, right? I don't have a freaking crystal ball. So since I have no real knowledge of the future, I don't know. Okay. Look at the data, look at the numbers, right? Anyone who says they think the market is going to go this way or that way, it's because it's because they have an invested interest or a bias towards the direction, and that's fine. Okay, what I mean by that is, you know, if you're in a buy on BTC or GU, gold, whatever, you wouldn't say, I think BTC is going down, so I'm going to go long. Okay, the opinion is biased from your own position. You will be right some of the time, you're going to be wrong some of the time. And that is the point of this. This is the point of trading, right? It's being able to accept that, because it doesn't matter if you're right. It doesn't matter if you're wrong, because most of the time you're going to be both. Okay. Now, you guys all understanding that? So we need to, when it comes to, you know, where's it going to go? Guys, stop asking that question. Look at the numbers right in front of you. Look at the data, right? There's a saying, you know, we don't see things as they are. We see things as we are. Okay. And when it comes to the charts, I think it's going this way conversation, it's about the deception of charts, right? Our eyes will literally seek out that which confirms the fact that you are seeking to prove or support the bias you already have established about it. Okay. It gives us a bias of looking for this, looking for what we want to achieve rather than looking at things objectively for what they truly are. I have a quote on my trading charts that always say, trade what I see, not what I think I see. Okay. So to overcome fear, right? To overcome FOMO, whatever emotion it is that you're experiencing when trading, anything that's not serving you, how about this? How about embracing trading for what it really is? Right? Trading for me, it is just a series of opportunities where I can buy, I can sell. I know where my stop loss will be. I know where I'm going to enter. I know that my stop loss will be in relation to how much I want to risk. Guys, it's just numbers. Okay. So when it comes to fear, there's absolutely nothing to be scared of, because risk, you know, we always say trading is risky. Yeah, and it is, but that's actually something we control, guys. We control our lot size. We control our stop loss. This is as risky as you want to make it. Okay. And now I had a conversation with a guy I met through mutual friends. He used to work for Pepperstone and has now gone on to create his own thing called like Trader Pilot or something. He's in Sydney, he's in Melbourne. Anyway, he's like crazy, crazy successful, right? And I asked him about what he's doing. And to sum it up, he basically says with his strategy, he's right anywhere from 20 to 30 times out of 100. Okay. And this guy is a freaking millionaire. And he said that if I'm in a trade and it immediately goes in the wrong direction, I'm out. I don't hold, I don't wait for it to turn around. This thing requires a lot of patience, as you know, but this is about mindset. This is about mindset, okay? This is what we do on these calls. So one of the biggest things I took away from our conversation was basically, you can have the best trading edge, the perfect trading plan, the exact same trade as me and Mike, and you still wouldn't make any money. Okay. Now I want to hold up a mirror for you guys, and I want to show you, not to get all cliche, but show you who you truly are. Because remember, on the charts, you're not just trading the financial markets, right? You're trading a direct reflection of yourself and everything else going on in your life, right? So I want you guys to think about how you are on the charts, because sometimes the conversations I have, you guys can be very negative, and I've got to pull you out of it, and that's okay. That's what my job is, all right? But what you are trading, the behaviors you bring to the charts, right? The mistakes you make, sitting there, holding your position, hoping it turns around, moving your stop loss so you don't get stopped out, right? Taking profit too early and missing out on potential gains because, hey, what's that saying? Who goes broke taking profit, right? Because profit's profit. Well, you did, because you cut it too early. Time and time and time again, because of these unserving behaviors, simply because, guys, you don't understand fear. Now, like I said, I'm not targeting anyone. We've all done it. Mike's done it. I'm sure Mike's, when he was first starting, he cut his profits too early. I've done it. Jen has done it. We all have. I'm trying to get you to see trading from a different perspective, and that starts with the awareness. I want you guys to go into this trading year. I know all of your goals, right? I asked you all about them. I know them all. I've literally screenshotted them, and they're in a folder on my phone. Okay. I want you guys to go into this trading year with so much radical awareness of yourself, of your behaviors that are sabotaging you, and understanding that true profitable trading starts with that awareness. Okay. Now, guys, trust me on this, right? You are not going to get rich by learning the best strategies. You don't need another call done on structure, right? You don't need the best, like you already have the best course of bounce back. You have Mike Miles every damn day. You have Zach, you've got Rock, you have Jenna, you have, the best educators to make use of every single day. You don't need anything else. What you actually need, okay, is a serious review of how you think when you're trading. You keep saying things like, I don't know if I can pick this up. This doesn't work. What the problems you're facing, it isn't a trading problem, guys. It's a you problem. And the stat of the whole, 95% of traders fail, quit, and lose money. That's not a trading problem either. It's a you problem. They just haven't learned how to think and properly deal with fear, right? So say, for example, you've let your losses run. Your reason is hope, right? Because you hope the market turns around. But the subconscious reason is to avoid pain. Okay. Our brain's primary function is to keep us alive. It is to keep us safe. Ego, it's preservation, your state of mind, right? Your brain will do anything to avoid pain. Okay. Another example, maybe you've cut your losses. You've taken profit too soon. Okay. You're like 50 pips in profit, hadn't reached your target yet, but you decided that you're going to take profit, you're going to close it out. Reason for that, profit still profit. You can't go broke from taking profit, right? I hate that, okay? Because your subconscious reasons there is still to avoid pain. Why? Because deep down, you're 50 pips in profit. So deep down, you hate the idea that the market is going to take back your profits with a pullback or a reversal, whatever, okay? Another example that I know a lot of you guys have been talking about is taking partials, right? Now, I used to do it, the whole scenario of like, oh, all these late stragglers. You know, maybe you take partials. Okay, I used to do it. Reason, you know, I'm winning, so I'll just take some partials. Guys, why would you do that? Because you still want to avoid pain, right? You're still scared of holding your original position, you know, your lot size, whatever.
Oh my God.
So you close out.
Cecil.
So when it comes to taking partials, you get scared that you're, you know, the market's going to, you know, maybe come back. So you close out half your position, halving your lot size, taking some profits. Why? Because your subconscious is still telling you to avoid pain. Guys, if I'm in a position, I'm in a position, period. I've got my stop loss set, got my lot size correct. You know, if anything, I add 2 positions, right? Do you guys get this? Like, ask in the chat, answer me this, right? Say, you know, you've got one person that's made $1,000 today, another person that's lost $1,000 today. Who is likely to continue trading? The person who won or the person who lost? Write in the chat for me. Who is likely to continue trading? The person who won or the person who lost? The person who lost, guys, think about this. The person who lost is far more likely to continue trading because, God forbid, they carry, yeah, that's nice. The one who believes, I like that. In my opinion, the one who lost is more likely to continue trading because they don't want to continue feeling that pain of loss, right? So you make another trade and try and profit something. But the one who won will do anything they can to protect it because it feels so good to win, right? To make money in this, we've got to break habits. We've got to learn to think other ways and what's normal, because what's normal isn't serving you, okay? So how do you do this, guys? I want you to write these questions down. 1, are you guys prepared this year to do what 90% are not doing? Are you prepared to do that, okay? Question 2, are you aware of your weaknesses? Question 3, do you have a routine on how to counteract them? Question 4, are you pushing yourself or are you just, you know, out for a Sunday drive, going to Sunday golf? When was the last time you're uncomfortable? Now, like an analogy I like to say with that, you know, when like you guys have probably all been driving for like a number, like I've been driving for like 13, 14 years now, right? I think I'm a good driver. I think I'm great. But take me on a race car track where I can drive like, you know, 260 kilometers an hour and I've got to go around corners really fast and, you know, jolt and, you know, dodge things. I'm probably going to be very shit, right? That's going to be scary for me. So when I say, are you pushing yourself to become better? Are you actually doing that? Are you putting yourself in uncomfortable positions to grow? Now, question number 5 is really important. So I've got my notes here so I don't deter. Okay, this is a good one. Are you trading your current account balance or are you trading your past trades or are you trading the markets? Now, this is a big one because say you opened your account with say $200, right? And you've taken some losses and now you're at $100. Okay. Do you look at your account balance and think, fuck, I've lost $100. I'm down $100. Got to make that back. So then you start taking trades with that mindset. Or do you just look at your account balance and like, all right, sweet, got $100 to work with. My risk is this, it's blah, 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 blah. This is what I'm doing. Are you trading your account balance or are you trading your past trades? Okay. Big, big, big question. And 6 is obviously, not obviously because you don't know what it is, but do you have a metaphor or a quote or a philosophy that enables you to detach from the outcome of your trades? Guys, mine is trade what you see, not what you think you see. Guys, hope is not a strategy. Look at the numbers that are in front of you. So they are my 6 questions for dealing with every type of emotion that comes with this. Okay, I'm going to throw it over to Mike. And he's going to blow all your damn minds.
My God, give it back to SJ. What was question 2?
Question 2 is, are you aware of your weaknesses?
Okay.
That's the formula that I work with.
Are you 1, 2, 3, 4, 5, 6. Okay, I got 'em. That was the only one I didn't catch when you said them. Okay, so there was a lot to obviously unpack in there, but I have the numbers or a little bit of the notes before the question. But getting to what this entire conversation of getting rid or not getting rid of fear, it is management of fear, in my opinion. Getting rid of fear is, again, not even something that I would consider to be a you problem, even though it is. But the idea of literally beating fear is like what monks in Tibet spend their entire lives doing, meditating 14 hours a day upside down on their heads do. That is an extremely bigger and way more, crazier conversation. So when it comes to trading, it comes back to what SJ said. It is all numbers. So how do you eliminate fear of going live? Because I think that was the original context, was the difference between demo and live. Well, philosophically speaking, the idea of demo versus live is what creates this entire problem in the first place, because people trade and act a certain way on a demo account as opposed to what they would like to do on a live account. And so therefore that discrepancy of, it doesn't really matter versus, oh my God, it really matters, is what sets up the psychological, just trash that we all deal with. But that's why, of course, I always say people need to be treating a demo account as if it's not a demo account and as if it's just literally an account, because that's really, a demo account is supposed to serve a function. And so trading a completely, trading an entire way that you're definitely not going to trade when you're live literally is just more or less a waste of time, because it's not teaching you. In fact, it's not even just a waste of time, it's a regression of time, because you actually start doing things and developing behaviors that you shouldn't have when you do that. And so letting the numbers control the outcome either way is how you start to step away from this entire idea of the idea, or how crazy it is, of it going live for the first time with, quote unquote, real money. If you know exactly what you were willing to risk and what you were willing to lose on every trade that you take, can anybody in here demonstrate to me how fear should exist? What I mean is, if you know exactly how much you're willing to make and exactly how much you're willing to lose, and then that either way it's going to hit one of these thresholds, what is to be scared of, in my opinion? Because obviously, assuming that you know what the risk and to the reward is, and you're comfortable with obviously the risk, I mean, it's not really hard to be comfortable with the reward, but being comfortable with the risk, I don't see how there is even, again, a possibility of you being uncomfortable with it, because by definition of you having risk to reward, it should mean that those numbers are managed in such a way to where it's, again, completely acceptable for that to be, the case. And then that gets into that kind of second part of partials. This is why personally I don't really mess with partials, is because, just like what SJ was saying, subconsciously it is I need to hold on to what I've got and I can't let it go, which is massively fundamentally a problem, because it's the same ideology that all of our grandparents had of save everything you have, like put money in the walls, put it in your mattress, hide it under the floorboards and things like that for that rainy day kind of ideology. And it's what I would honestly consider to be a generational curse that all of us, are not, I wouldn't say, I guess all of us, but most of us are afflicted with. And this generation is going to be one of the generations to break that ideology, because it's not about having enough. It's about making so much to where it doesn't matter. That is what our generation fundamentally differentiates between all of the previous generations before us. It was that they were just trying to meet their needs. Trading is not inherently about meeting needs or paying bills. Jobs are for what pay, jobs pay bills. What trading is an entirely different type of, perspective that I always say all of the time, which is something that we were never raised for, in the sense that we were all raised to be workers. Like literally, it's not even a secret or even up for debate. This was literally the purpose of the public education system, mandatory, in fact, public education system throughout the world, was that it was designed to feed capitalism. So here we all are going against that. And that is something that, again, I talk about all of the time, is that what that really means is that we were not taught any of these things. So the work that needs to be done, and, just putting it into a different set of words, but it's exactly what SJ was saying, was that it is a us problem. We are afflicted with these things, and that we have to be the ones to work on these things, because if you want something to change, then you must change. And that's the point blank period of it. Yeah, and trailing stops, yes, would be the same thing, because explain to me, can you justify a trailing stop to me without, and not just you, because that's definitely, Clinton, thank you for that, but it definitely goes into context with anybody. Can you justify trailing stops without, or in my opinion, greed is what a trailing stop is. Can you get around that ideology, yes or no? Meaning, can you prove to me that there is another reason for a trailing stop to be there other than the fact that, well, it could keep going, so why would I get out? I can make more. To me, subconsciously, that's greed. It's a very, very mild form of greed. And of course, you're not really going against anybody, or, like greed might be the wrong word, because that's a really heavy word. But I mean, that's literally what the emotion is called, is that it could go for more. So therefore, I should trail the stop. I'll trail the stop exactly where my take profit was supposed to be. So I've locked in my, my actual profit that I was going for. But look, it could go another 100 pips. Again, I can't really get around that, other than it's greed. And what that ultimately starts to create is kind of the same thing with partials. This is what it is called, is a slippery slope. It starts off little with certain things, and then it starts avalanching into much bigger problems, or at least in my experience. That when I allow certain things like that to happen and start to bend discipline a little bit, like trailing stops or partials or convoluting things for me, is where the mistakes start to seep in when it comes to trading. I like the idea of it's going to hit stop loss or it's going to hit take profit. Either way, it doesn't matter, because I'm already in that trade. Now I'm moving on to the next trade, because that's what it's really about, is how many trades that you can get into and actually manage yourself and learn how to do a very specific thing. And then, again, just quantify that over and over and over and over and over, or not quantify it, but multiply it over and over and over, and consistently do that. It's not about, well, I need to get into this trade so I can flip $1,000 into $10,000, because again, trading isn't about flipping money either. That is the idea of flipping money is not what any kind of investor or any of them are thinking about. They are thinking in percentages and ROIs, not how fast can I flip 1,000 into 10,000. It's the entire system of thinking is, again, what needs to be challenged here, because the expectations that get set from the society that we come from versus what, of course, actually ends up happening, especially when you do approach with that particular mindset, is where all hell breaks loose. My topic. All right. So you want me to read this, SJ, or you?
I'll read it out.
Okay.
So yeah, I just got Stu to type it in here. So my topic: I seem to be getting fairly good at spotting imbalances, trend bias. I see FC equal highs, lows, captures, etc. My biggest challenge is knowing when to trade or not to trade. even though I'm on demo, I still seem to not either pick the great trades, or they simply haven't happened recently, or I'm getting my 5 to 6 hours sleep at night. Obviously, the big moves happen in the middle of the night generally. So I don't know if I'm a swing trader, sniper, etc. So at the moment, putting it all together, then get to go live, it all comes down to the topic tonight of human behavior.
Putting it all together is like you have all of the parts to the car, and the car will work once it's all put together. But I just kind of wanted to, before I actually even get to that question, did you see, even though on demo, you see how it shows itself again? Exactly what we just talked about. And Stuart, just to you, my friend, that has nothing to do with you. It's only just to exemplify that. Again, that just kind of, I just wanted to point back to our previous little topic there and just say that is one of the problems when it comes to that. And again, it's not you, because all of us think that. And of course, that was just you typing it out in the question. But I just wanted to point it out because I thought that was kind of interesting. I still seem to either pick the great trades, or they simply haven't happened, or I'm getting my 5 to 6. So that part, just to be clear as well, meaning you either stay up and trade or sleep and miss trades is what that is, like one or the other. The big moves happen in the middle of the night. Now that also confuses me, because is Stuart in Australia?
Yes. So our time zones, obviously, New York is like our 1 p.m., 1 a.m.
Okay. But London is in y'all's evening.
7, yeah.
So they're still, so forgive me, it's hard to
We can if Stu's happy to unmute, like, why don't we just bring you on? And you can.
Sure.
Stu, if you're there and you're actually comfortable unmuting yourself, take it away.
Rightio. Can you hear me?
Gotcha.
Righto.
So,
Am I?
hello.
Yeah, so that's just pretty, I just jotted that down, so it's all a bit muddled. But yeah, so obviously the volatility is higher in the New York sessions. So obviously, like, I'm sitting up trying to stay up till about 11 at night into the London session, and then either nothing's, it's not happening at that time, and I go to bed. So, and then obviously in the morning, something's happened overnight or whatever. But
I would say that it wouldn't. I guess I could understand, like, what should I be doing than swing trading, scalping, or those kinds of things. And I wouldn't say that it's necessarily okay. So here, because I'm still trying to piece it all together as well. So you're saying that if you do not sleep, that's only when you find the opportunities, right?
no. That's not what I'm saying. It just when I first started, they said obviously the more volatile are the when the London's open and New York's also open. So that's obviously in the middle of the night for us.
Overlap.
Mm-hmm.
Yeah, the overlap between the two markets there, the sessions.
Okay, but the opportunities that you want to, just to be clear, the opportunities that you're looking for happen during that time that you're either sitting there at the charts or sleeping, right?
Sleeping generally, it seems to me.
Okay, so
but obviously they happen throughout the day on all the sessions and all the different markets.
Yeah,
but
I would definitely say that it's something that happens with a lot of people, even over here as well, because a lot of people like to trade London. So London is more like you're in New York, pretty much, and then New York's obviously during the afternoon for us, as London, it's just backed up or whatever. But no, there is workarounds for it. Whenever you're finding the imbalances or the institutional count, the ICs or the particular areas of interest, there can be pending orders that first of all can be set. If not, there is alerts. If you are a light sleeper, I mean, trading, in my opinion, would definitely be one of the best things in order to work around a schedule that especially isn't necessarily accommodating trading at the moment. So
Mm.
whether you wanted to do pending orders, whether you wanted to maybe even look at a different chart at a different time, because certain things do move at different, at other times as well. They could also, of course, move during New York, but some pairs also move during, Sydney's session, for example. So there's opportunities that can be found there. And then, I mean, which ones, there's nuances to each of them, but alerts on TradingView can be sent to your phone. Or even if you just have the app, it can be an alarm that goes off, or, then the next best thing would be, of course, pending orders. But I think that would definitely go further into this, as well, as in, it doesn't matter if it was swing trading or scalping or, intraday, or going for any different, I guess, specific one, because if the opportunities can be found potentially before you lay down and go to sleep, there's a lot of people I know that place trades and then go to sleep and then wake up, and then whatever happened ended up happening. They got in and stopped out, or got in and hit take profit, or got in and they're in the middle of the trade right now. If you're comfortable with that, that can also be something that can be done, because they actually like it that way, because they're like 3 hours into the trade already. So whatever kind of initially happened, and they weren't even conscious to watch it. So they just wake up, and whatever the previous analysis they had for the time before, or that whatever that night before, when they sat there and did the analysis and put the pending orders in, they adjusted their view to the market, of understanding that they're looking at it here, but the moves are more than likely going to happen here. So, and they know that they're not going to be awake, or obviously just even watching these charts, because the same thing can be applied to somebody who works during the New York session, like where they can't even look at their phone. It's the same thing for them over here as well, which is, again, alerts, alarms. I mean, there is things to ultimately get you to that point to where you don't have to do that, because that's the next thing, is that wouldn't have to be forever. In trading, the idea is to obviously get it to that point, right? Now that could take years, or however long it could take, of course, but eventually that could, of course, change. So it wouldn't be like you're bound to that forever, I guess you could say. Does that make sense?
Yeah, absolutely, Mike. It's pretty much what I'm doing. And I was just, I guess, that just just clears it up that a lot, that's how it's done. I guess just because I'm a novice and I'm still learning, still make mistakes.
Oh yeah, and that'll never change. All of us.
Yeah. Okay.
Guys, I just want to say there, thank you so much for sharing that, Stu. Guys, Jenna's calls are at 11 p.m. Yeah, Jenna loves trading New York, for example. I probably, like I said in the chat, when I first started, my learning times was literally like 7 till 10. That's all I did. I can count on my hand, like less than 5 fingers, how many times I've actually actively traded New York session. Like there's 200 odd pairs that you can choose from. You don't have to trade the ones that are just in, the most volatile in New York. There is opportunity. You've got 4 trading sessions. Like Mike, I don't know, maybe you want to share a little bit about how you actually raised on the yen. And, that's not really active during London, New York either. As active, I should say. Yeah,
it's not. That there's definitely things that one of the reasons why I've kind of didn't even know I liked the yen back then for this reason. But what you do find out is that it's interesting for the yen pairs when I sit down, because again, try to incorporate time zones here. I believe it would be like your 4 p.m. is when I'm looking, and by then the yen has moved decently, right? When do I go live on my session?
4 p.m. our time.
Yeah, so that's in the middle of like Sydney and Tokyo. Like they're not in the middle, they're wrapping up, but way later into it. So the yen has already done what the yen is going to do. So Euro JPY or USD JPY or those other kinds of pairs do also have the potential to move, but not because of the yen necessarily, but because of the dollar. So they're more susceptible to what happens to the market conditions, as in, like, if the dollar is going to move, that's going to reflect on USD JPY. if it barely moves, because then there's other ones that are, like, for example, USD CAD. It takes a lot to move USD CAD. It doesn't take very much to move USD JPY when it's because of the dollar, is what I'm saying. So that just gets into the currency strength of one versus the other, and just, I mean, more like nuanced things, but it ended up working in my favor because I was raised on the yen, like SJ said, and I actually disdain the Canadian dollar in terms of price action just because of the way that one moves. And that is because of the way it was raised, but nonetheless, I do appreciate that there's, and that's always, and that was the other thing as well that comes along with this, is that trading has to be the most bendable, or it can, bend to you, as opposed to, not, I wouldn't say, I guess, literally, not literally every single thing, but a ton, the majority of everything else, because it's open 24 hours a day. So if 24 hours a day, 5 days a week doesn't work, I guess 24/7 would be better, and that would be cryptos, but those move obviously a little bit different as well. But in my opinion, if not this, and not that, of course, Stuart was even saying that, because he certainly wasn't, but there is always, if there is a will, there is going to be a way for it, especially in the 24-hour day market, one way or the other. Mike, could you, I didn't realize that was a question. Oh, I see. And how you made sense. I actually literally never read that question. And how you made sense of the price action involved with those. That's kind of what I was talking. Well, I didn't answer that specifically, but I kind of answered it with that, understanding the Canadian dollar price action versus understanding the yen price action. Like, did you hear me answer that in what I was saying? Is that not why yen specifically, but my disdain towards the Canadian currency because of its strength, first of all, versus the dollar. And then also how it just literally moves against all of the other ones, as opposed to the yen and something like USD JPY. And yes, I could be biased a little bit because that was like the first pair I ever looked at. And so it's just, my eyes are, I guess, really adjusted to it, because that is my personal experience of trading, or at least, of course, in the beginning. And I mean, even to this day, I mean, I still look at it literally every single day. But no, I appreciate the price action in it, because again, it does move during Sydney. So if there is a move on USD JPY in the first 8 hours of the day, more than likely, of course, which can be checked with other pairs, with correlation of different pairs, you can see if it was the yen that did it. So if the yen was the thing that pushed USD JPY up, then you know that whatever is going to end up happening on the dollar index is more than likely going to be 100% reflective on USD JPY, as opposed to USD CAD. So it's more susceptible. Or even if it doesn't move, then the yen, then of course that would flip the table. Instead of it, mirroring the dollar index perfectly, if the yen doesn't potentially move on the Tokyo session, then you reverse everything I just said, and then it does the exact opposite of what the dollar index does. Does all of that make sense to you? Hopefully it does. That all makes sense. Make it clear to me I'm on the right path. Just, yeah, yes. Zero in on the pairs. Thanks for sharing. Yeah, I hope so, because hopefully I answered that more of just like with an example, I guess you could say. But currency strength it's the currency strength meters. So some are stronger than others. Do people in Australia travel to Japan often? Aren't y'all really close to Japan?
Yeah,
Or no?
for snowboarding.
But how far is Japan in a flight?
I don't know.
Like
6 hours.
10. Okay, 6 hours. So
I may have lied to you.
I didn't know. Because obviously Japan in the United States isn't like a popular place to travel to. It's well, I mean, everybody wants to go to Japan, but it's literally, of course, on the other side of the world, just like Australia. And people don't just go to Japan. That's like a whole deal, right? But the only reason why I even asked this question was that it's like 1,000, or how many, or not 1,000, 100 yen to $1, as opposed to the Canadian dollar. That is, what is the Canadian dollar right now? 1.27. So 1.25, Canadian is a lot stronger than 100 yen to $1. That's the currency strength. That's the currency strength meters. USD CAD right now, the price is set at 1.27. So that means that for every dollar, or I'm sorry, for every 1.27 CAD, that's $1. So obviously the US dollar is a little bit stronger than the Canadian dollar, but against the yen, it is way stronger than the yen. Does that make sense? So one is more susceptible than the other. And that just gets into, more of the nuances and all of that different stuff when you talk about USD CAD or Euro JPY and stuff like that. So you're not just picking pairs based off of price action. Like as you get further into this, you'll understand that, again, with something like currency strength, if here's the last example of this, the pound. The reason why I don't trade the pound is because it is 100% driven by fundamentals. Whatever is happening with Brexit is going to drive all of the GBP pairs, like all of them. And it's been that way since, when did it happen? 2016, 17? I forgot, 2016? When did Brexit start? Hold on. Where is it? Right here. Yeah, July of 2016. So pretty much ever since I started trading, that has been the pound's behavior. It's not like it's been like that since it's, the birth of the GBP, right? But ever since Brexit happened, if anything gets talked about in Brexit, boom, all of the GBP pairs are they're gone. And to me, it's just, and it's not like that's necessarily inherently a bad thing. It's just that is, again, a price action understanding or a currency strength understanding, or just understanding if you are wanting to trade the GBP pairs, for example, you as a trader have to be a lot more aware of what is going on with London's news and their government and the decisions that they're making and the meetings that they're having, specifically even around Brexit, because all of that stuff can directly affect what happens to you in trading, which of course, I'm not saying that you need to just be in there studying literally like all of the legislation and all of that. Just understand if they're having a meeting on Brexit and the decision of this meeting is going to then set the tone, which is what a lot of the Brexit meetings are, because they just keep extending it. They've been extending it for like 4 years now at this point. That kind of decisions make all of the GBP pairs fly up and down 400 pips all the time, or 200 pips, or just something ridiculous, So
can I just
hopefully,
say, I'm so
again,
glad that you've touched on that, because in our trading group, a lot of the guys trade pound. And I've been saying, and I'm just like, we've been talking a lot about Brexit stuff as well, and just the whole, like, I wasn't even trading. I had a trade from the 21st of December. I think that was my last trade. And it was a phenomenal trade, but I didn't trade at all over this, little silly season because of that. Like, it was so volatile. And also, like, the conversations that we were having with traders were, I'm getting stopped out, what's going on? And I'm like, bro, I warned you. Like, there's so much shit going on. Like, even my mentors are not even trading this right now. Why are you? So I know a lot of people in the group learned some very good lessons over this Christmas period.
Yeah, it's not that it's bad. It sounds like I'm putting it in a negative light. There's a ton of opportunities, but there's just a lot of opportunities to lose as well. So that comes down to your appetite of risk. How much do you want at once? There is no right or wrong answer to this question, specifically, because somebody who does have a higher risk appetite and that should be trading the pound would lose their mind on something like USD JPY because it moves so slow, which then causes the overthinking, which then causes the overaggression, which then causes all of the losses to start happening. So just because USD JPY moves slower does not inherently mean that that pair would be better for you or worse for you. That is a personal, individual question, because they do all pretty much have personalities. Like, they really do. And that, of course, most of that is driven off of the country. What is the narrative of that country? What is going on? What drives the currency pair? What can affect it? Like, again, another example, earthquakes or tsunamis make the pound go nuts. When it hits Japan, usually there's a massive reaction. If all hell breaks loose, most money floods to the yen. It is considered what is known as a safe haven currency. The pound is an example of not a safe haven currency because it moves like this. The yen doesn't. The yen just, it does its thing. Well, I mean, of course, it does have crazy massive moves, but generally speaking, it doesn't. So most of the economies and things like that, it floods back over to the yen when all hell breaks loose all over the place, because that's just, for whatever reason, that is the narrative that goes along with that. So I mean, there's so many different examples, like the Aussie dollar and the NZD. They're like the same thing when it comes to it. The fundamentals that affect Australia and like the decisions that y'all's political leaders make also end up like very, very much so applicable to New Zealand as well. Even though they're, of course, different countries, y'all know this, of course. They're kind of like a bundle, just like the euro and the GBP, just like the US dollar and the Canadian dollar. I mean, or the US dollar and the peso. It's just kind of how it is. That's just all like kind of devils in the details things though, but you will figure that out as time goes along, for sure. I promise you. Though, don't get stuck on like, oh, I feel like now I'm trading the wrong pair. Like, all of this is not meant to make you in distraught of like, oh, crap, am I trading the wrong thing? No, it's just, if you feel like you need to change it, you will discover that. Don't get in anxiety because of this conversation, please.
Love that. All right, so Mike, to wrap this call up, I want you to give these guys some wisdom to take into this year, to make this year like their year. Like most of these guys in here, their goals are ginormous and they're amazing. So what's your best wisdom for them for this year's trading?
Definitely. And I think that this is something that kind of was already brought up, not for me, but the acceptance of pain. If there's something that, especially for the new people that are here, maybe something, or maybe you have heard this 100 times, but maybe if you hear it this way, it might click maybe, but everything you desire, everything you want, everything that you were working for is on the other side of pain. Something you don't want to do, something you don't want to go through, something you have to do that you don't want to do. Things, not just one thing. There's things that you're going to have to do that you don't want to do. And the quicker that acceptance comes to it, the quicker you can let go of whatever pain is temporarily experienced through whatever it is. So, and of course, just to be clear, if that wasn't the case, then why wouldn't you already have that car, that house, or whatever it is, of course. So if obviously you don't have it, there has to be something that's in the way, and what is in the way is growth. Just like when you go to the gym and pick heavy things up and put them back down, you literally shred your body in order for it to grow back stronger. Your brain is the same, especially when you're trying to develop new habits and set in stone new disciplines and things like that. These are things that your brain naturally will fight. Naturally. So it's not about, how do I do it? It's just, again, keeping yourself in check as much as possible, that your brain is naturally going to take this shortcut. Your brain is going to do its best to convince you to stay in bed versus get up and go run a mile. Your brain is going to say it's very, very much so easier to go into the cabinet and eat a bunch of snack food than it is to prepare food, the right food. And those are just those little examples that if there's something that you want to work on in 2021, it is that, which is getting comfortable doing the things you don't want to do, as opposed to the things you do want to do. That is where the simplest little behaviors start to change everything. Like if you don't brush your teeth every night, start brushing your teeth every night. Not because not just for dental hygiene, but just because it's a discipline. And of course, when you wake up, or if you want to brush your teeth 4 times a day, or whatever it is that you decide to do, or make your bed every morning. Like nobody wants to get out of bed and immediately make their bed, but do it. What was the first question? Let's see. Are you prepared to do what 90% of people, are you prepared to do what the majority of people will not do? That is absolutely the 2021 question, because you have found the thing that will absolutely get you a vehicle trading to get you to where it is that you want to be. It's definitely going to take time, but how does it get there as fast as possible? Is you truly not just prepared, are you excited to do what 90% won't? Because imagine you doing what only the 10% do, but being excited to do it. So now it's not something that you were not wanting to do. Imagine if it was something that you wanted to do because you paid the price here for the reward later. You got up and made your bed later, so you didn't have to make your bed later. So the reward is that you have a nice, clean looking room throughout the day, because now you don't have to spend the time doing that. Or I could just sit here and name a lot of rewards, and that's the secret to doing that. How do you replace behaviors and patterns? With rewards. How do you train a dog? With rewards. You find out what drives a dog, and then you build a habitual pattern behavior based off of whatever it is that food, toys, attention, whatever it is. We are the same exact way. Find a way to reward yourself for doing the things that you don't want to do. And then that's how you start to get more excited about, it's okay, I got you. I'll do it because I know what's going to happen later. So start what's the opposite of reward? Right? Is it, or not risk, but the price of doing something for the reward, not the price to reward. It would be, I can't think of the right word for it right now. Like, do what you don't want to do right now for the reward later. Whatever cliche, not sacrifice. There it is. Pay the sacrifice now for the reward later. Sacrifice and reward. There we go.
Give up to go up.
Yeah, but do it with little things. Like, it starts with little things. Cleaning your room, again, making sure you stay up with laundry, or cleaning your car, or organizing your phone, the pictures in your phone. If I were to ask you guys right now, go to your library on your phone, and if I was like, hey, find me this exact picture, you're going to be doing this. So, clean. You understand what I'm saying? Pay the sacrifice to, do that. So then when you have, somebody's like, yo, what about that picture? You just found it. You know what I mean? That's what I'm talking about. Sacrifice to reward system. That's what it is.
I love that. Something that really helped me as well with the exact same little thing was just decluttering your home, going through your wardrobe and just chucking out things or donating them that you haven't worn in however long. And that just that is one thing I'm actually really looking forward to bus life, is just having less things and less stuff, and just having a super simple lifestyle. But I love that, Mike. Thank you for sharing that. And I think it's a good thing to end on that, number one question. Are you guys willing this year to do what 90% won't? Are you guys going to be here at the end of the year?
And imagine what happens when you do.
Exactly.
Imagine what happens when you do what 90% won't. You get the rewards that only 10% of the world sees.
Absolutely. Because if not this, then what? Right? If not this, then what, guys? So I really love tonight's call. I will upload this recording in the next couple of days, and I will send it to you. Rewatch, take notes, and just apply. If you do anything this year, it's just, do what others won't. Get everything you want. Apply what it is that we teach you, and be here a year from now. Seriously, your life will freaking change. So thank you everyone so much. Now, for my business builders, please stay on the line. We will take a little stay on the line. Shows your age, doesn't it? Stay on the line. Stay on the call. We can take a little intermission if you wish. And yeah, otherwise, everyone else, thank you so much. You may depart. And I'll see you next Tuesday at 9 p.m. Thank you again, Mike.
Love you guys.
I think.